Welcome to my latest edition of Bank It or Tank It. Today I'm excited to actually be using one stock that you all recommended. This stock came from Jane. She wanted me to take a look at Xilinx. So thank you, Jane, for sending that in. I'm happy to cover it today and dive into what's going on with that stock right now. We'll run through the fundamentals, the sentiment, and the technicals for Xilinx. So that's going to be the stock that we'll feature for our Bank It or Tank It today. So before we dive into everything, I just want to say a big thanks to everyone who's been writing in lately with all your comments, all the stocks that you want me to take a look at. I'm seeing everything and I'm going to jump on these in the coming weeks. And in my next video, I'll feature my quick take segment where I'll run through several of these that I just haven't gotten around to yet. But I'll be working on getting to all of these over the next several months. I'll just start doing one at a time and I'm going to cover these. So a big thanks to Jane for her comment today. But a thanks to everybody who wrote in, Vicky, Hazel, Phil, Patrick, all the kind words. I really appreciate it. And it really means a lot to me to see these come in the comment section on my YouTube video. I'm looking forward to doing more of these, but just continue to leave your comments below this video and be sure to subscribe. If you haven't yet subscribed, leave me a comment. And now let's get back to what we're looking at for Xilinx today. All right, so before we dive into the specifics for Xilinx, I wanted to cover a broader topic, and that's the trade war between the US and China, because Xilinx is a global company. This is a stock, a semiconductor stock that has cutting edge technology across the globe, and it works to keep those partnerships in place even throughout the trade wars between the US and China. And it was one stock that was heavily impacted, and we'll take a look at that when we get to the technicals. I can show you on a chart how the trade wars impacted Xilinx over that time frame. But the bottom line is that recently we just got a phase one trade deal signed between the US and China. And how I see that playing out throughout the rest of 2020 is I think it's going to take a backseat to some of the other core fundamentals and key drivers for tech stocks like Xilinx, that the fundamentals will actually be able to play a part. And the monumental shift for tech stocks will just be able to take over. There won't be this noise going on in the backgrounds about more tariffs, or when are tariffs going to increase or be reduced, and what tariffs are on, or any sort of bans. All that stuff's going to kind of take a backseat because 2020 is an election year. And during an election year, President Trump's going to be focused on re-election. He's going to be working his best to make the stock market look good, to make the economy look good. And overall, this is part of a re-election run, part of even the phase one trade deal. I don't think we'll get a phase two trade deal over the next 11 months, right? We're going to go into the re-election period without a phase two trade deal, because once he gets reelected, if he gets reelected, President Trump will look to increase the pressure on China once again. But until then, I think he takes a break from the pressure on China, because he's already won the trade war part one. He has a phase one trade deal. China's going to buy more goods from us. Tariffs are paused. It's great news for everybody, and it's great news for semiconductor stocks like Xilinx. And I'm going to show you on a chart what that means for the company today. So before I jump into the fundamentals of Xilinx, I had this slide from their website that I wanted to show you. It talks about that they're at the core of key innovations, and it's in all these different applications. We're talking about automotive, that's cars, that's self-driving cars, 5G wireless technology. That's going to be an explosive form of technology that's really going to sweep the nation over the next couple of years. And it's going to be in everything, and it's going to make our internet super fast, from our phones to even our home internet. We'll be able to use a mobile network instead of the landlines that we're stuck with today. Data centers, which are just continuing to collect more data. Then we have aerospace and defense, broadcast, consumer, industrial, medical, and science. That's another major breakthrough for technology as we get into this idea of personalized medicine, which means it's not a one size fits all. It's going to be based on how your body reacts to more medicines. And they'll be using more and more semiconductor components from Xilinx to help make that happen. Then we have testing, wired communications, wireless infrastructure, and these are just some of the main innovative products. But the bottom line is that Xilinx is in all these innovative products, and it's doing so across the globe. We look at other companies, they're focused just on 5G technology. They're focused just on self-driving cars or just artificial intelligence. Xilinx is in all of that, and it's got a foothold already in 5G technology, in artificial intelligence, in these key things that you see across the news headlines. Xilinx is working behind the scenes with the other companies that you do see on a daily basis. Companies like Microsoft, Apple, Facebook, they have to use other companies to help supply the chips for the innovative products that they want, and they end up turning to stocks just like Xilinx. So this is a company that's really helping push the envelope for tech across the world. So it's a great concept to grasp as we dive in to the key fundamentals for the company. So let's take a look at the revenues in net income for Xilinx and see how that stacks up. Now on this chart, the net income is the line going across it and the revenues are actually the blue bars on the chart. So let's look at one at a time. The total revenues, we can see that they're growing tremendously. Since 2016 until we get the expectations for 2022, revenues would have doubled over that 6-year time span. So that's a very strong revenue growth trajectory that the company is on. You can see that by looking at the data on the right-hand side of the chart. Then we'll flip over to the net income and we're going to use the numbers on the left-hand side of the chart. And you can see that that is also expected to nearly double over this time frame. So Xilinx is really hitting it on all strides when it comes to fundamentals. Their revenue is growing consistently. Their net income, the bottom line earnings for the company, is really showing progress. Even though 2018 had a slight dip, 2019 had a solid rebound, 2020 basically flat, but then expectations are that it really takes off from there. So fundamentals for Xilinx so far are looking pretty good. And speaking of fundamentals, I wanted to bring up one other slide that I saw on their website. Now this is it's near the bottom of one of the pages I was checking into. They call it Building the Adaptable Intelligent World. Now a lot of people, when you look at this, they're like 5,000 employees. That's great. It's a large company. 60,000 plus customers. Those are clients. Those are people that they reach out to. They have a broad reach of companies that they work with. I checked their website. They have a blog, all these stories about how their products are going into it. Tons of great stuff. 60 plus industry first. That's just speaks to how innovative this company is. Now, I say all this stuff and it's because I'm not technically the fundamental guy. I don't particularly care what a company does. I'm really chart oriented, which to me, price is everything. And that's what I'm going to focus on, the price for the stock. But when you dive into a company like this, I like to get past all of that other great headline stuff. We look at their patents right here, 4,400 plus patents. In the technology world, patents are irreplaceable. Having good patents is a monumental shift between a company that may be struggling to get by and then a company that's excelling on all these different fronts. And that's what Xilinx has for you. We saw all the different industries that they're working with and that they're working in. So it's so important that they have these patents in place to help protect not only their products, but also the innovative products that they're working on now that they're issuing patents for as they move forward. In case anybody tries to steal their innovations, they'll have these patents to help back them up in the court of law. So that really helps mold the fundamental aspect of the company that yes, their revenues are growing, their net income growing, and they have these patents to help back up the growth that they are seeing in case anything really takes off and they run into any issues with people trying to steal their innovations. So now let's jump over to the key competitors to see how they stack up amongst some of the major competition in the industry. So the market cap is 25 billion for Xilinx. And when we look at the average, it's 58 billion. So this is a pretty small semiconductor stock. Again, they actually have a pretty broad reach. They're in all these different industries. But as far as semiconductor stocks go, you look at NVIDIA, Broadcom, Texas Instruments. When you compare it to some of these tech giants, Xilinx is still a smaller stock. Now, let's go over to short interest as percent of shares outstanding. So this is a key metric to see how investors are bearish on the stock. They would short the shares to benefit from the stock falling lower. And we see that it's at just 1.9%. The average for these stocks is just 5%. That's extremely low across the board. And that's really because of the major shifts we're seeing across the technological fronts. Technology is driving the future going forward. And semiconductor stocks are really going to be what's behind that major shift for the stock market and for the economy. And investors know that. And we see that they're really not trying to short these stocks because they know that the next moves higher are going to be led by companies just like this. And then when we look at the price to earnings, the average for all these companies is 63. Xilinx, 26.9. So it's well below the average. And this is skewed quite a bit by a high price to earnings ratio for advanced micro devices, 252. It's a little out there. But then even when we take that out, Xilinx sitting at 26.9 is still under the average, which is still going to be a little bit above 30, even if we take out advanced micro devices. So even though Xilinx at 26.9 is priced higher than the S&P 500, which is at 24 times earnings, it's not really an overvalued stock because when you look at the rest of its competitors, it's still undervalued. Now, when we flip over to look at the revenues and income and the dividend yields, Xilinx checks out pretty well once again. Xilinx is growing at 13.1% for their compound annual growth rate versus 11.4% across all these competitors. Then their net income is growing at 16.45% compared to 28% for their competitors. But when you look at the net income above you can see that not all these companies have the compound annual growth rate for the last 3 years. So that narrows the competition down quite a bit. And then Microchip Technologies really stands out with a 98% bottom line growth rate. So it's really probably coming off a small base and just saw a big jump from that. So overall, Xilinx still ranks really well when it comes to revenues, net income, and we saw that on a chart. And then when it comes to dividend yield, it's at 1.5%, slightly below the rest of the competitors, which are at 2%. So this isn't a stock that you'd want to own for the dividend yield, but it is a stock that really matches up well when it comes to price to earnings, revenues, net income, all these other areas. So far, Xilinx checks out for the fundamentals. And now I always like to look at what the other analysts have rated for the stock. Even though I put little weight onto this, it really speaks towards our sentiment rating for the bank it or tank it analysis. And it's rated a 2.39, so it's slightly in the outperform range. 2.5, middle of the road, because it's on a scale from 1 to 5. So it's slightly rated outperform. This is out of 22 analysts, according to S&P Capital IQ data. It tells me that people are still pretty bullish for the stock, even with everything that's been going on with trade wars. The analyst community are still rated this stock as a buy. So now let's move over to my favorite part, the technicals. So we get to get into the price chart for Xilinx. And as we jump into this, I already have my key levels pulled up that I want to talk about today. So we'll run through these pretty quickly. First, the 200-day moving average. Again, this is still a sentiment indicator. So we use the 200-day moving average to really just tell the sentiment for the stock. If it's trending higher and above the 200-day moving average, that's a bullish sentiment indicator. But if it's trending lower and the stock's below the 200-day moving average, then it's a bearish sentiment indicator. So right now, the sentiment for the stock is to the negative side because it's trading below the 200-day moving average. And right here, when prices come back up, I expect them to bounce a little bit lower off of this 200-day moving average. It'll act as a key resistance point for the stock. But I have a key trends that I want us to take a look at. First, this green support line across the bottom here is if the stock is in a downtrend, this will be its next key level of support. We have the declining resistance line showing the downward trend channel between these two key levels. But you can see this trend line on the bottom, the green support line across the bottom, actually creates a wedge pattern between the key resistance line and this new green support line. And that's what we're going to pay attention to today, because the longer the trends have been around, the more important they are and the more prominent they'll be for the stock. So I expect prices to actually bounce a little higher, hit resistance off this 200-day moving average, and maybe come back down and test this support area one more time. And then once it tests this level, we can look for shares to go back up and hit this red resistance line again, because these wedge patterns end up being the main part for the stock. When we zoom out, we can see what this wedge pattern really looks like. I mean, the stock exploded from 2018 to 2019, doubling in value. And then it got hammered. It cratered down more than 50%. So during this 50% drop, this volatility was really due to trade war noise. All the talk going back and forth of tariffs, how that's going to hurt Xilinx, really held back the stock over this time period. But now we just got a phase one trade deal. So I think we have a lot of that bearish news that's going to move behind the stock. And after this major breakout that we did see fall into this wedge pattern, eventually I think we're going to see a breakout to the upside. And you can just see, though, looking back on this chart, this goes back to 2011. And the stock has no monumental moves like we saw just over the last year. We can change this chart to a logarithmic scale, which really puts the chart in perspective in terms of percentage move and not price move. So you can see prices doubled back here from a low of about 27 to nearly $60 a share. But it didn't happen overnight. This one took over 2 years before it doubled. So what we saw in 2018 and 19 was shares doubling in less than 12 months. So that was a very quick move, and then it warranted the prices to pull back and to consolidate into this wedge pattern. And that's why now I expect this wedge pattern, it's also called a symmetrical triangle pattern. And usually these triangle patterns, they end up being continuation patterns, which means that we can expect the breakout on this after this formation to be to the upside. And it doesn't have to happen right away. Again, I think it's actually going to hit resistance at this 200-day moving average and push back lower and test my long-term support line one more time before we get the breakout. Does it have to do that? No, it could surge right through the resistance point. Just about the news we got lately with the easing of trade wars, that could be enough to help push this stock above that key resistance that it hasn't broke out of just yet. So now let's go back to my checklist. We're going to run through the fundamentals the sentiment and the technicals for Xilinx and see how it stacks up. If you're keeping up along the way, you probably already have an idea. I mean, I'm pretty bullish on the stock, on at least the sector, the semiconductor sector, and what they have going on for the company. So when we looked at the fundamentals, the net income, the revenues, they were all trending higher. On a price to earnings ratio, it was below the average for these other key competitors. So this stock gets a check mark for the fundamentals today. And then we went to the sentiment. It was rated a buy on the average analyst ratings from Capital IQ, but then the stock was trading below its 200-day moving average. So the stock, to me, the stock price is going to overrule what the analysts are saying. So right now, Xilinx actually gets an X mark for its sentiment reading based on the price chart. And then when we go to the technicals and we looked at how that stock was trading, again, it's in a wedge pattern, which is a little uncertain, but knowing that these are typically continuation patterns and I expect the stock to break out to the upside, that means that it's going to get a check mark today. And once we tally those up, that means that Xilinx ends up on my bank it list for today. So that means Xilinx is a stock that you can bank on in 2020. I see shares headed higher from here. And in just a moment, I'll give you my exact price target over the next 12 months. But before I get into that, I just want to give you a chance to scroll below this video and click subscribe so that way you don't miss out on any of my other bank it or tank it videos. My last video was on MongoDB, and be sure to check that out. It ended up on my bank it list, but you can check out the video to see why and to get my price target for where the stock is headed. And I just want to give a shout out to Jane today for sending in the comments on Xilinx. Thank you. I'm glad that I was able to cover this stock for you. And be sure to leave any other comments that you have below this video, because in each of the coming weeks, I'm just going to be going through the list of comments that I have for stocks that you want me to take a look at. And I'm going to be breaking those down in my bank it or tank it videos. So be sure to go below this video, leave me a comment, and check out all the additional videos and links that I have below this video that'll help you explore more of our bank it and tank it analysis and learn about the different ways that I like to trade in the stock market. So now let's go back to the price chart and figure out what my price target is for Xilinx in 2020. All right, so as we come back to this price chart, I had mentioned that I expect prices to break out to the upside. So that's great. But when you take a wedge pattern, we've done this before, but you can figure out the expected move by taking the height of the pattern. And in this case, it's about $80 a share, 65 to 140. And with the stock trading around $100 today, that means I'm expecting the stock to move nearly 80% over the next 12 months. Now, that sounds like a huge price target and a major move for the stock, but we just saw the stock move more than that from 2018 to 2019. So it's not out of reach to see this stock jump 70 or 80% over the next 12 months. And that's going to put us at a price target of $170 or $180 a share. Now, it can seem a little out of reach just knowing where we are today and seeing what's all going on, but I don't expect this to play out in a parabolic move higher. Instead, again, I expect shares to kind of continue to consolidate around this pattern here, eventually break out of this trend, and then start to trend higher through the end of the year. And I've showed you this chart before, but I wanted to pull it up one more time. But before we go to that, I just want to make clear that my price target is $180 a share for Xilinx over the next 12 months. That means January 2021, I see Xilinx being 80% higher than where it is today. So it's a stock that I'm extremely bullish on heading into 2020. But keep in mind, these are the key levels. This is what will change my mind. If the prices fall below this green support line, then I'm not so bullish on this stock. This long-term support line in green has to hold up for me to maintain my bullishness on the stock. If that fails, then we're looking at this downtrend. That's a stock will be stuck in. And it also means that it's breaking downward out of this wedge pattern. And that means that shares could be plummeting back $70 or $80 below this $100 line that it's trading at now. So that means shares could be around $30 in 2020 if it breaks below that key support. But again, these are typically continuation patterns. So I'm expecting the stock to break out and head higher. And as far as how that's going to get there, we can look at this chart of a presidential election year. I've talked about it towards the end of last year. I've used it in a different bank it or tank it video, but really it's just a seasonal trend during a presidential election year, how stocks typically trade. And you can see that at the beginning of the year, there's usually some quietness, a little bit of pullback in the stocks as they take profits, kind of uncertain about how this year is going to unfold. But remember, the president is in re-election mode. He's going to be making things look great for the stock market. That's his goal this year. He's already easing up on trade tariffs. He's going to be playing this to get reelected. And that's why you typically see stocks head higher as we head into the November election. And then regardless of who gets elected, we typically see stocks rise after the election. So we're looking at stocks to continue to soar after the election, regardless of who gets elected. in 2020. So this is going to be huge going forward. I'm going to be following the seasonal chart for the presidential election cycle to see how the S&P 500 stacks up. But if you want to follow other seasonal trends that I like to trade and that I like to use to make consistent gains in the stock market each and every month, then scroll below this video and you can check out how these seasonal trends on broader sectors can filter down into identifying the number one stocks that we can trade for the stock market over a certain time period. So check out that video. It tells you all about my strategy. It's an awesome strategy to use these seasonal trends in the stock market. And it's why I'm going to continue to follow this election cycle seasonal trend in 2020 to see how it lines up. But for now, all I know is that Xilinx is in this wedge pattern. I expect shares to break out and go higher. So that's my bank it or tank it for today. If you enjoyed it, click the like button and you can hit the bell to get notified whenever I post a new video. So thanks for tuning in today. Until next time, I'm Chad Shoup.